Hi, I am Anna. I come from www.ntvforex.com. The lack of fresh stimulus left gold bulls wary. Analysis http ntvforex.com news ID 50992A8122027 56:29 am. What did I miss? Stimulus measures keep being debated, vaccine hopes are at first raised then more sensibly assessed, and stocks in the US keep going up. The S&amp 500 has risen about 5%, whilst European markets are flat over the period. I seem to recall in July a lot of chatter about European equities outperforming, but there has been little to show from that trade so far. Gold has smashed a new all-time high and profits been taken, an easy win for most, whilst oil prices have barely moved. So, what has changed? Britain's economy is on the ropes, but we knew this already. UK GDP fell by 20.4% in the second quarter, which was largely in line with expectations. Economic activity is bouncing back. The economy grew 8.7% in June but remains well below the levels seen in February. Having been out and about over the last 3 weeks, I can safely say there will be more recovery recorded in July and August. But getting back to 2019 levels of activity is going to take a very long time as we see permanent impairment in certain sectors of the economy, as well as behavioral and social changes. Cable recovered off the 1.3020 horizontal support formed by the low on Monday on the update to continue to trade its August range. With the dollar turning around and seemingly finding its near-term support, bust may struggle to hold its 1.30 level. The Democrats and Republicans can't agree anything. Stocks on Wall Street slipped after gridlock in Washington left investors wary of pinning their hopes on a bipartisan stimulus package. But the S&amp 500 was at one point just a few points from its all-time high at one point and could still take it out this week. Senate Majority Leader Mitch McConnell naturally blamed the Democrats for this but revealed the two sides had not spoken since Friday. The Dow and S&amp 500 both snapped a 7-day winning streak, whilst European markets rose a touch on Wednesday's open after a strong run-up on Tuesday. The FTSE 100 continues to trade the narrow range of the June pullback without any signs of breaking out. The lack of fresh stimulus left gold bulls wary and profits were taken, but we have seen a big bounce off some important technical support this morning. Spot dropped under $1,900 but found support on the old resistance at $1,865 and the 200-period SMA on the 4HR charts may offer some technical support. More important is the trend support offered by the line drawn from the lows made since the March trough. Gold's rally has been all about stimulus and inflation, and so doubts about whether there will be more stimulus saw investors recast inflation expectations a little, and the technical exhaustion of the move needed to be factored in. US real rates rose, with 10-year tips back to a 0.99%, having struck a low of a 1.08% last week. Benchmark 10-year yields rose to 0.66%, but whilst real rates are so deeply negative, gold will have support. Chart gold recovers $1,927 after finding support at $1,865. Joe Biden named Kamala Harris his running mate for the race to the White House. 2 points about this really stand out. The duo needs to get the vote out, and Harris should energize many who may not otherwise vote, but they cannot risk losing the center in the Rust Belt where the issue is the economy. But the problem for Trump is that accusations that Biden's VP pick was too zealous a prosecutor when acting as California Attorney General make it difficult for Republicans to say the Democrats want to be tough on crime. Her appointment will somewhat blunt Republican attacks on law and order. The key question for investors is who wins in November, and whilst details like VP picks are important, they are just a small part of the story. Trump still wins in my opinion, whatever the polls are saying. New Zealand is in full panic mode, locking down Auckland amid a mystery outbreak of COVID. The RBNZ duly announced it would expand the large-scale asset purchase program to $100 billion, which just nudged the Kiwi lower. But the real focus is on negative rates. A full 4 mentions of the committee looking at a negative OCR were in the release. Lower and negative rates is increasingly the path of least resistance for the RBNZ, which makes the NZD open to further downside risk. Oil prices were up a touch, with WTI SEP taking a $42 handle this morning ahead of the inventory figures from the U.S. Energy Information Administration, which are expected to show a draw of 2.9 M barrels. API data yesterday showed stockpiles fell 4.4 M barrels last week. Elsewhere in FX land, watch the double top on the Eurist pair with the rejection of 1.19 looking more convincing. We look for neckline support around the 1.17 level to hold for bulls to make a fresh drive higher. However, the pullback in U.S. Treasuries and uptick in yields may offer support for the dollar to push back hard. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.